What do you think is driving some of this demand? Because as you noted, the fundamentals sort of look a little skewed maybe from what the true value is. What's driving the demand? Is it just that a lot of these funds have so much capital that they're ready to deploy, they feel pressure to do something with it, and they're chasing the few deals that come up? Or do they see something in the market maybe that you're not seeing?
Well, Maury, I think it's a combination of factors. One, most of my clients who are real estate investors probably don't own any stock or any bonds. They simply own real estate. So
they can't help themselves.
to the extent they have portfolios that are generating monthly cash flow, that cash flow builds up. If they keep it in a bank, they're making, what, 40, 50 basis points?
Right.
So a 5% return on real estate seems very attractive relative to that. Or if you're buying treasuries today, I think the 10-year opened this morning at 322. Why would you want to hold treasuries at 322 when you could buy real estate at 5 or 6%? So I think from the typical investor's perspective, there's a compelling reason to want to continue to buy, especially with the perception that values are at a relative low point. I think from the institutional capital side, many of these funds have gone out and gotten capital from investors. There's been very little for sale, so the investors are saying to the fund managers, what are you guys doing? Why aren't you investing the money I gave you? And I think that's creating motivation for them to bid perhaps a little more aggressively than they should be. But that is where the domestic demand really is coming from those two areas. And from the foreign investment perspective, I think we have an interesting time where we're seeing a lot of stress in economies all over the globe. And most interestingly, most of the investors that we have from overseas that are investing are not real estate professionals. They've made money in other businesses, and they've decided that the U.S. is relatively politically stable, relatively economically stable, and so they're coming into New York and they're buying properties, particularly in Manhattan, with no debt. And they're thinking that now is a time to invest in a relatively stable hard asset, particularly given the fact that most investors believe that at some point we're going to be in an extremely inflationary environment.
It's a good hedge against inflation.
Absolutely.
Which countries are you seeing capital coming in from?
Well, within the past 3 months, we've sold properties to investors from Israel, Canada, Kazakhstan, Spain, and Russia. And we're dealing with
pretty broad-based.
Very broad-based. And again, you have the situation in Europe where you have Portugal, Ireland, Italy, Greece, and Spain are really on the cusp of insolvency, but yet there are investors from those countries that may be saying, hey, you know, I should put some of my capital into a more stable environment. And we see investors from those countries coming here looking to buy. So we're dealing with dozens of foreign investors at the moment that are looking to take advantage of the stability that the U.S. offers.
What kind of properties do those investors tend to be interested in? Is there a particular sort of investment profile they like?
Well, they look for any type of building that does not have rent-regulated residential tenants in them. Our rent regulation system, I think, borders on the insanity because it's a situation where most people look at rent regulation as an affordable housing program. When in actuality it is nothing more than a 10-year program. And whenever you allocate housing based on inertia rather than on financial ability, it's a system that makes no sense, and so foreigners particularly look at it as something that they don't even want to try to understand or deal with. So most foreign investors will say they'll buy anything as long as there are no rent-regulated tenants in it, and particularly they like Manhattan south of 96th Street.
Are they interested in trophy-type commercial stuff, or they just care about cash flow, they don't care where it's coming from?
Well, most of the investors we deal with, and the segment of the market that we're most active is in the under $100 million market. So those tend not to be the trophy assets, although you've seen many foreign investors look for large trophy assets, but there really haven't been that many of them available over the last year or so. So we're seeing a lot of good activity on the smaller assets, mainly in the $2 to $30 million range is where most of the demand from overseas is coming from.